Hey, I just wanted to get on here. I'm on my way to Nashville, and I had a little bit of time in my drive. Normally, when I drive or travel somewhere, I've kind of got my educational things blocked out to where I know like what videos I'm going to watch or what podcasts I'm going to listen to. Uh, which podcasts a lot are on YouTube right now, so a lot of the time is on YouTube. And then I usually have an audiobook that I usually commit to about 25 minutes per day. And then I also have time where I take in some scripture and stuff like that, time for reflection. So I'm in between that time right now. I don't have any phone calls or any meetings scheduled, so I figured I would jump on here and just, hey, talk about different things that's going on in life and offer some stories of my own, and then hopefully, just if somebody wants to put something in the comments, you're welcome to. I'll answer it if I can. Tonight, this afternoon, 4:30 Central Time, we have a great speaker coming on to our live Game Changer call. It's called our Game Changer Live Q&A call. We answer these questions. We got about 48 years experience there with the founders, myself and Dan Kinder. And we started that for a free Zoom for an educational source for people to just come and learn. So, really looking forward to that because Hannah Kessler is coming and she is going to completely blow everybody's minds on infinite banking. The use of term life insurance, or not really term life, but whole life insurance, cash value life insurance, and how you use that as your own bank, which is a super, super cool topic. But I wanted to talk about banks, assets, liabilities, and that's what I wanted to do during this time again, and just kind of tell some personal stories on different things. So, one of the things, hey, thanks for watching. See you up there. Uh, One of the things that I want to talk about was, when I was younger, I didn't really understand the difference between assets and liabilities. So there was definitely times in life where I bought a lot of things with my money, and sometimes I bought things to I thought reduced my taxes, but essentially they didn't. They might have removed my tax liability at that time, but at the same time, they cost me money. They didn't make me any money. So all the time we overindulge in things like we buy new trucks, we buy new cars, we buy things, but if they're not making you money, then they may not be creating your financial freedom. And I don't know if you guys heard me talk or not about indestructible wealth, but that's really what I try to create for my life every day is indestructible wealth. And so I wanted to go back and tell some stories of myself. And how we doing? Thanks for joining, Carlos. Hi, Robin. Hello, everybody. Thanks for joining. So, when I was younger and, I started out as an entry level job and then I got a more expensive, or got a job that paid me more. That goes. And as I started to make more, I started doing long forms on my taxes. My tax professional had taught me, because I always did side work and stuff like that. Hey, you can file a long form and you can write off some of the tools you buy, and you can write off some of the things that you're purchasing for travel and gas and all kinds of stuff. So I started like overindulging quite a bit and spending money on things that I thought that I could write off of my taxes. Well, um, morning. I thought, oh, I look like Robin Williams. That's a comment. Thank you. Good morning. So, at the end of the day, when I'd go to my tax professional, I'd be like, all right, I bought all these things. Here's all my receipts, and hopefully I can get more back on my taxes. Well, some of those things that I was buying was physically costing me everyday money. Like I had bought them for the reason to um, get money back at the end of the year, like reduce how much I made, what I paid in the government, so I could get more back. But the reality is I actually spent down like profits, like my savings had dropped because I had bought these things, and the things that I was buying, they weren't assets, they were liabilities. Those liabilities were costing me money. Now, in my mind, at a younger age, I thought that these things I'm buying, man, I'm reducing my taxes. I'm going to get more money back at the end of the year. And then this is going to be great. But the amount of money I spent compared to the amount of money that I got back at the end of my tax year was, hey, how we doing? Was not good. And I really learned some lessons. And I didn't really have the best accountant to be able to help teach me these things. So I had to kind of self-educate. Now, YouTube back then wasn't a huge thing. There was YouTube, but there wasn't tons of educators out there. So, and I also didn't realize that you could go to Books a Million and the other bookstores, even libraries, and find self-help books that would help you learn tax stuff. And even today, there's still new authors coming out that are actually teaching these principles. So what I wanted to give words of warning on is, man, you're only as good as the information you're able to receive. And I hope that the content I put out is good information for you. It's educational. And a lot of the education that I put out is actual life stories. It's things that I've lived through, and it's made me, I feel, qualified to teach those because I applied them to my life and they work. But my tax professional at that time was like telling me, yeah, you can go buy these things. Well, I didn't ask enough questions. I didn't ask questions like, well, what if I go buy a new car and will that reduce my taxes? Well, what I should have asked, or she should have asked as well, is, well, yeah, you can go buy that new car, but is it for business? And you already bought a new truck, so is that for business? Like, which one of these can we write off? And then there's also a weight limit, on certain things, how much you can depreciate on your taxes. So that's another thing. That's why people buy big SUVs and trucks and stuff like that, because the weight limit allows you to depreciate them 100%. So, of course, I was going out and buying these things, and they were costing me money. They were making me feel good internally, but they were not making me money back. So those were good life lessons. At that point, I was like, all right, so I've definitely spent more. And I've also used debt. Like I went to the bank and got loans for some of this stuff, and then my paying that back was costing me money, and it wasn't enough to get enough back on my taxes to physically pay those payments throughout the year. So those were hard lessons learned. And that's how I started to figure out, okay, so there's a difference between assets and liabilities. And in simple terms, any liability is anything that costs you money that nobody else is paying for. Assets to me mean anything, and I'm going to explain assets in a minute. Assets to me are anything that pays you back or gives you tax. Um, it gives you depreciation. It gets you appreciation, so that it goes up in value, and you can depreciate it, meaning you can get some back on your taxes, so you can reduce some of that earned income. So that's real assets, what that does. And also the other thing about assets is assets give you the ability that somebody else is paying you for that service, for that property, paying to use it. That's really what an asset is. Liability is just something that you are physically responsible for, putting up everything for it, like paying the insurance, the taxes, and everything else. But the difference is with liabilities, there is no income tied to it. There may be a depreciation to it. It may appreciate. Maybe that's your home that you live in. But however, it doesn't make you any money. Now, unless you do pad split, which pad split means that you're renting out a room of your home or a basement or an upstairs, and you're renting that out, and you can make money that way, but it's still your home. You're still paying the majority of the payment and taxes and all that stuff and all the utility bills. I've also seen people rent out their home for Pure Space, so they got a nice room in their house, podcast studio. People rent it out for a place for people to come and do podcasts instead of in their car. So there's ways to make money with your home. But assets to me, are either commercial / residential properties, which are multifamily, or any type of real estate that I can lease out or I can subdivide it and sell parts of it. I really like assets that create income. And even so, all you YouTubers out here, all you creators out here, the things that you're creating, these videos that you're creating, especially educational content, that is an asset, because once you are monetized and people do find it, then it can become an income generating thing. So think about those things as you're doing things out here in this world, and you're creating assets. The more assets you have, the more income you have. And the more income you have, the more ability you have to create indestructible wealth. Indestructible wealth really means that you can physically go to zero completely this month, like pay out all the money you have in your account, and next month it comes back. That's what really indestructible wealth means to me, is you're creating an indestructible wealth stream of income, and you're protecting it in its own assets. It gives you the ability to have money come through your account every single month. So if you give away everything on the 15th, on the 20th it comes back, or even the 15th of next month it comes back. And then you choose to whether you want to go to zero again or not. So that's really what indestructible wealth is, in my opinion. And that's what we've strived to create over the last, I would say, 10 years. We've really went hard on this to create indestructible wealth. But think about that, guys, is you're creating assets, like you're either buying assets, and I want to talk about an asset most people don't talk about, and that's your retirement account. So retirement accounts is an incredible asset. They're money that you've made throughout your efforts, whether that's a W-2 job, your inheritance. There's all types of ways to take money and put it into an IRA, self-directed 401k, or a Roth. All great tax vehicles, or taxed vehicles that remove tax liability. They're a trust or an account that gives you the ability to pick alternate assets to invest in, and then ultimately you can make money on those. So they're great assets, and here's why. But they're only as good as your person managing those assets. They will make you money, and they will provide tax depreciation. It can grow your wealth without taxes involved. So we have people that invest with us that are like straight out, hey, I'm going to invest 50 to 100,000, 500,000 with you, and they invest that by wiring funds through their personal account. Well, whatever account they wired through, we're paying that account back when the dividends get paid out. Well, the only issue with that is, it's not my business, but I usually do try to interject a little bit, is when we physically send them a dividend check back at the end of the year, they have to claim that as earned income. Like that money that we sent them back, like for instance, the person that invested 500,000, they get back $18,750 a quarter. Well, that's $75,000 a year. That's $75,000 a year. They got to claim 75,000 as earned income. So that's why we like to teach people and help people use a self-directed IRA or a Roth to invest, because we're paying the trust back, the investment vehicle back. And that's a great way to grow your money tax deferred. That's the biggest difference. If the person that invested that money would have invested through a self-directed IRA, a Roth, or anything like that, we would be paying that $18,750 back to the actual retirement account, and it's not earned income because it's not going to them personally. It's going back to the trust, back to the fiduciary, back to the account, and it's growing that wealth tax-free. So a retirement account can be a huge asset, and I hope that you guys are using these as assets to grow your wealth, grow your retirement. Because I'll tell you right now, I spent tons and tons of money when I was younger, and as I told on myself a little earlier, I spent them on liabilities that didn't last very long. So I had to learn that I should have put a lot more in a Roth, in a 401k, self-directed IRA, and that would have been a way more cash flowing, higher cash flowing asset than what we have now, because we didn't know what to know. So I wanted to just get on here. I got about 30 minutes left of my drive. I do have a meeting coming up at 9:30. So I hope you guys had some some good insight with this video, and hopefully you would be able to like, share, and subscribe if you haven't already. And I would appreciate all the comments. Thank you so much. And you guys have a wonderful day. Thank you.